Hello there. We all know about the well-established pressures on the global economy, but what about their impact on the price of oil? Well, I've been speaking to Robert Montefusco from Sucden about the price of the black stuff. So we see the US fiscal cliff overhanging all the markets around the world. How is it affecting oil at the moment?
Well, as you said, it's a whole commodity issue, not just oil. It's copper, it's grains. The uncertainty is that the currency movements will affect oil. Now, I see there's going to be a solution. Obviously, Obama's talking tax hikes for the rich, and there's going to be some concessions. So going forward, there will be a resolution to it, or a solution, should I say. So the way it affects oil prices is in just the nature of what news we're hearing on the fiscal cliff. If we say it's going well, they're negotiating well and there's going to be a solution, then the oil price was tending to tick up again. If we say there's not a solution, the market's tending to be falling, because if there's not a solution, there's obviously going to be a negative growth impact on the US. So rates muted probably could be around about 0.5% or something like that, downward growth projection, if there is not a solution. And obviously that'll impact on oil demand, and so less demand will see oil prices come off. But nevertheless, I think there will be a solution. So oil prices are reacting to headlines and other geopolitical issues right now.
But if we do get to January and we hear nothing from Capitol Hill, could there be a big downturn in the oil price? Not
just on that, because oil, obviously, we're looking at the demand picture. Oil will be weaker, one, not just because of the US, but we've got to look at it globally. Demand in Europe's diminishing because the situation there is pretty dire still. Where we are seeing a bit of growth still is China, so there's still a lot of demand there. So we roll over to January, okay, there will be a bit jittery, markets will be a little bit nervous, and you might see prices tick down a bit, but we will be focusing on other issues as well, particularly supply situation and Middle Eastern developments.
The US could become the world's biggest oil producer by 2030. I recently went to Norway, did an interview with Seb. They didn't think that it was going to have any great impact on the global picture for the oil price. What's your view there?
Well, it depends how the oil was priced, because currently, as you know, there's two major contracts in oil. The WTI, which trades in the US, and the Brent contract. Now, the Brent contract focuses on a lot of the Middle Eastern nations, where 40% of oil is coming from. Now, obviously, the WTI contract is more a domestic market and focuses on what's happening in the US. So although US would become totally self-sufficient now in oil, they're pretty much 83% anyway, a lot will affect how the pricing of the world's oil continues. If we're benchmarked to Brent still, then the impact would not be so great. But if people start pricing more to like a WTI contract, when you'll see the US is such a big producer, then that would have an effect on where the oil is going. We've got to see if the demand in the US stays high, because okay, they're producing a lot of oil, but a lot of that is going into products, and a lot of those products are being exported.
Sure. And another aspect of oil is obviously Middle Eastern tensions. That has never really gone away, but it started to rear its head again, especially in Egypt. Obviously Syria is ongoing. Those countries aren't oil producers as such, but they're still integral to the picture there.
Very much so.
Are you concerned about that, and how will that impact the oil price?
Well, it's the contagion factor. I mean, there's unrest there. Like you say, Syria's still a mess. Yemen's sort of back on. Then we've got the conflict, Israel, Iran. So that's always a hotbed. You know, as we say, because of 40% of the world's oil comes from there, that's always going to be in the main agenda for affecting oil prices. So yes, we're still a little bit jittery. You know, Iran and their atomic talks seem to have gone on the back burner for the time being, but there'll probably be a refocus there once we get this fiscal cliff sorted.
Sure, and what about Libya? Because that's a big oil producer and it should be starting to come online again.
Yeah, it has been steadily coming online, back to sort of pre-war levels. I think we're about 1.7 million barrels per day. They're looking in Libya to get it up to maybe 2.2 million. But then again, there's still a lot of protests over there. You know, a lot of the situation for Westerners over there is still a little bit of a tricky situation. As you've seen recently, we had the death of the US ambassador out there. So it remains to be seen whether there's going to be a lot of Western investment in Libya to get that production to those high levels. But nevertheless, it is improving, and we're quite a high level now. And the good thing about Libya, it's a good quality crude. It's a light, sweet crude, very easy to refine. So there's still quite a good market for it.
What price are you targeting for next year? Again, to refer to Seb, they were looking at an average price of over $100 per barrel next year. Would you share that view?
Yeah, I think we're pretty much there. It's not going to be too far from $100, $105 because the supply chain is quite a balanced affair with oil right now. So, you know, 1 minute we have, you know, a slight, as we mentioned, trouble in the Middle East, and at the same time the demand picture is not quite there, so let's reduce it. So it seems to be balancing out right now. So I think oil will stay relatively high. I'd like to see it a lot weaker, go below 100, really, to get down to sort of $90. But we've got OPEC meeting next week. We'll see how if they keep their quotas the same. But I should imagine around 100, maybe a little bit lower, but that's pretty much there.
Well, some really great analysis there, and we'll continue to bring you top quality interviews here on Dukascopy TV. But unfortunately, that's all we have time for right now. Goodbye.